Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, May 27th, 2010. This morning we're talking about the appetite for risk. This morning starting out as a full-blown risk-taking morning. As I mentioned yesterday in the blog article titled Proceeding with Caution, we started seeing signs that there was a potential reversal happening in the markets after all the selling that's happened due to the euro. And I mentioned that every day that the euro gets by without some sort of negative news coming out, that's going to be a positive for the market, and the market's going to use that to reassure itself that that the situation may be under control and that it's okay to go out in this risk-taking mode. Well, this apparently didn't take very long for this to occur. We see a pretty big move this morning. As far as risk-taking and risk appetite goes, as again, the euro made it through another day without bad news. Now, in addition to not having any bad news, it actually sounds like they've got their act together over there, and everybody's saying the right things. Everybody's on the same page, and the message is basically this: that the euro's not going to collapse. All right, that while yes, the eurozone isn't going to grow as quickly as possible. And possibly, go into recessions. You know what? That's okay, because growth coming from other areas around the globe are going to offset that, and that's fine. So, the trend for the euro is still down at this point in time. All right, but what we're seeing is that, with the pace in which the euro got sold off, we're seeing, some bounces here as it comes back. So, looking at the chart here, just looking at a quick 30-minute chart, we're looking at the Aussie yen right here. Aussie yen is probably, this is the biggest mover this morning, but this is also indicative of risk in the market. When this pair is the highest pair out there, that means that there is risk-taking going on, that there is large risk appetite. Conversely, when it's the weakest pair, that means that there's major risk aversion. Now, this just basically identifies as a carry trade. Simply what it is, okay? You're selling yen, you're buying Aussie, you're taking the yield differential, which is one of the highest on this board right here. So that's what's happening this morning. Traders are getting back into carry trades. So we're seeing it happen with the Aussie. We're also seeing it happen with the Kiwi. We can look at the Kiwi right here. Basically looks like the same chart as the Aussie, huh? Some news out of New Zealand, though. Their trade surplus numbers came in better than expected, showing signs that their exports are improving. They've got reduced imports. However, the IMF came out with a report saying that the Kiwi may be 10 to 25% overvalued, all right, and that a lower valuation could help them with their current account deficit. So the expectation in New Zealand is that we're going to see a mid-year rate hike. This could put that on hold for now. So we'll have to see what happens, but today carry traders are happy with the yield differential. Let's look at dollar loonie here. We talked about the rate policy meeting happening in Canada next week. I mentioned that this would probably be a pretty good time for them to raise rates if they want to do it, because the loonie's been so weak against the dollar. If they raise rates, it's going to fall back down. Let's look at this just on a daily chart here. May give us a better idea. Okay, so even if they raise rates next week, they still could fall back to parity, which is better than being at parity, raising rates, and then having it, come down somewhere to here. Obviously, a weaker loonie is better for Canadian exports. All right, but you got to remember that, the major exporting, or the major importer of Canadian goods is the U.S. So we'll see what happens there. Having a loonie which is stronger than a dollar isn't necessarily a bad thing, but obviously they'd like to have it as weak as they can. So we're seeing the euro. Euro bounce back a little bit here. Looks like got a little bit of a bid here. Got a low 121. What is this, 121.3 thereabouts? So, the trend, as you can see, it's still pretty much down here, and we're giving back some of the gains this morning that the euro made overnight. We can just take a quick look here. Look at it on the 5-minute chart. This should be a little bit more clear. So you can see it made some gains back, pushed higher. Now it's coming back down. As long as there's an orderly decline in the euro, it's not a bad thing. If the debt crisis can be contained, that's a good thing. Yesterday we saw that the markets reversed. They started off higher with the risk-taking mode, but what had happened is that there was a rumor going around that China was going to reevaluate their euro holdings, and basically what that meant was, people were afraid, oh my God, China's not, doesn't like the euro, they're going to start selling it, and that's going to, really pound this thing lower. Well, they've came out and they've refuted that rumor this morning, so that was one of the major reasons why the market went back into risk-taking mode. And then also, let's see, CPI figures in Germany came in, and they weren't out of line, so even with the lower euro, inflation appears to be contained. Now, I talked about U.S. numbers. U.S. GDP figures came in this morning, and it came in slightly lower than expected, but it still came in showing positive growth of 3%. Now, a lot of people are worried that a lot of that growth is due to government stimulus actions, which, that could be the case. So we're going to have to wait and see going forward if once these measures go away, if the economy sort of stand on its own 2 feet. Initial jobless claims also came out largely in line. So it just shows that we have, while we do have an improving economy here in the U.S., it is moving rather slowly. So as long as we get global stability, okay, that's going to be okay for risk-taking in the market, all right? But, with this euro crisis looming, that's sort of the fly in the ointment, if you will. So anything, happens there. So as you can see, the markets can have short-term memory. They can go from risk aversion to risk-taking in the drop of a hat. A lot of carry traders look at this as a great buying opportunity because now they're getting into these carry trades at a discount, which is improving their rate of return. So that's what we have today. Keep an eye to see if the market continues in this trend, or if we get some other sort of news that reverses it, like we saw yesterday. So that's what we've got today. Happy trading.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.